What's up, guys? Michael Edward here, head trader at your trading group. It is March 3rd, and we got a surprise Fed announcement today at 10 a.m. The Fed came out and announced a 50 basis point cut on the Fed funds rate, and it really screwed up a trade for me in the morning. The Fed called me with my pants down today because I was short the market coming right out of the gate today, but I was long the TVIX, but thinking that the SPY was going to really pull in today. And it reminded me, the setup on that trade idea today reminded me a lot of 2008. So in 2008, when we had that big stock market crash, one of the biggest crashes in history, the Great Recession, the housing market, the crisis and everything, that's when I was trading at the hedge fund. It's actually the year that I won the Trader of the Year award. But there's so much in what I'm seeing in the markets today that reminded me of 2008. Not because of systemic risk and I think the economy is collapsing. I'm just talking about price action and volatility in the marketplace. Obviously, the economy is in 100 times of a better situation today than it was back in 2008. So that's not what I mean. I don't want to scare anybody watching this video thinking that, oh my God, Mike said it's the next 2008. It's not what I'm saying. I'm saying volatility-wise and price action-wise, there's a lot from 2008 that I'm seeing in the markets today. And that was the premise behind my trade idea in the morning. And it was working out beautifully until 10 a.m. We get a surprise Fed rate cut. Let's zoom this in. Here you guys can see we were just selling off right in the morning. That's a 5-point drop on the SPY, guys. That's a 5-point drop. And then all of a sudden, bang, bang. Surprise 50-point basis cut from the Fed. Now, a couple of things we're going to talk about today. Today's a red day for me. I got beat up a little bit. I've been trading really, really, really well over the last several weeks. I had, the last week of February was my biggest week in a while. So it was a real banner week for me the last week of February. Made a little bit of money yesterday. Today I got beat up. This is normal in this type of volatility in this type of market environment. It's very, very common in this environment for traders to have like their best days ever, but also to have their worst days ever. And that's because of the level of volatility is so intense. This is unprecedented volatility. I've never seen volatility like this, not even in 2008. Things were not moving around as volatile as they are today. This is unprecedented volatility, okay? This is the type of stuff that we as traders live for. This is an amazing time to be alive. It's an amazing time to be a trader, to be able to trade through this level of volatility. But with that volatility comes extreme moves. Extreme moves in the sense that the market and individual stocks are making far bigger moves than they normally do, or even that they ever have. We made a 16-point move in the SPY from the high to the low in 4 hours. It typically would take the SPY a month to move 16 points. We did it today in 4 hours. That is unprecedented volatility. Let me pan this out a little bit. And here it is. From the high of the day down to the low is a 16-point move from 314 to 298. To put that into perspective for you, let's go to the daily chart. When you are talking about range, okay, a daily range of 16 points, look at these daily ranges. These are like 2-point ranges. Okay, let's just look at the month of December. The month of December, we went from 307. We went from 307 to 325. It took an entire month for the SPY to do that. We just did that, moved that same amount in 4 hours. That is what I mean by we have absolutely unprecedented levels of volatility that I have never seen before. Obviously, things were volatile in 2008, but the SPY was at $100, not $300. So the moves now are going to be far greater. They're going to be far more volatile. The moves are going to be much bigger. Okay. The moves are going to be much, much bigger. The other thing that we have to think about here when we're looking at volatility is position sizing, because the only way that you can account for this level of volatility is by reducing your position size. That is the only way that you can account for this level of volatility. Okay. That is why you're going to have traders are going to have their biggest days ever and then also going to have their worst days ever, because the moves that the market and stocks are making are so much bigger than they normally are. So that's why if you're right, you're going to have your biggest days ever. If you're wrong, you might have your worst losers ever. Okay. If you are struggling either today or yesterday, or if you have gotten beat up, or if you're like, man, I just had my worst day ever, do not get upset. That is normal in this type of environment. You have to understand. I want to really put this into perspective for you guys so that it helps you trade through this level of volatility. I want to help you trade through this volatility. I just released a brand new course for members. That is, I talked about it yesterday. That's the course that talks about how to survive and thrive in a stock market crash. It is all about how to deal with and trade this volatility. That's what the entire course is about. I'm making these videos to help you through this level of volatility and help you understand, get into a mental state of mind where expect big moves, expect big fluctuations in your P&L. There's no way around it when stocks are moving as much as they are. The only way to combat that is lowering your position size. Now, I love this volatility. When I'm trading really well, I had a big month in February. I've got a cushion. I'm starting to push a little bit. Okay, I got beat up today, but this volatility is not going anywhere. Come back tomorrow, guys, and every single day, you have a chance of the SPY moving 10 points, 15 points. You have a chance of the Dow moving 1,000 points throughout the course of the day, whether up and down. Okay. You have real possibility of getting moves like that. And those are the type of moves that will give you your biggest days ever. So you have to stay very focused during times like this. Focus is even more important now than before because the moves are so much bigger and the moves happen very quickly. So you need to really laser focus in your watch list. Do not be looking at 10 different stocks throughout the course of the day. You will miss your moves in all of them. Focus on something specific. Like if you want to trade the overall markets, focus on trading the overall markets. Don't get caught up in individual stocks. Okay. If you want to focus on individual stocks, don't try to get caught up in the overall markets. Focus on, 1, 2, 3 different things max and really laser in, put blinders on and focus on the opportunity because everything is moving. Okay. Everything is moving. So you've got to stay focused and be able to identify the opportunity, guys, because it's everywhere. Okay. It is everywhere. All right. So let's talk about my trade setup, what reminded me of 2008. And then I'm going to tell you guys what I think about the Fed cutting interest rates 50 basis points today by surprise, which I think is a huge monumental mistake. Who the hell am I, right? I'm not an economic genius. I'm not a member of the Federal Reserve. It was a unanimous decision to do a 50-point basis cut. The cut of the interest rates is not necessarily where I find the biggest issue. It's the surprise cut. The way that they did it today is where I find the biggest issue. And I'm going to talk to you guys about that as soon as I go over this trade on the TVIX, because that's something that we want to discuss. I want to discuss with you. That's kind of a more of a macroeconomic type of lesson with what does all this mean with the Fed cutting interest rates and how does that affect the markets and why were we down almost 800 points today after they cut rates? Isn't cutting rates a good thing? It's probably what a lot of people are saying. I thought when they cut rates, that's a good thing. The markets usually go up. Usually that is the case. Usually the markets do go up when the Fed cuts interest rates. Not this time, and I'll explain to you why as soon as we go over this trade. Now, the SPY coming into the day today. Let's let me delete this. Let's zoom this out. Let's go to a 15-minute chart. Here we are at our 15-minute chart, guys. Coming into the day, I'm looking at this level, this 310 level, 309.50 to 310. There's your prior support. Back on the 26th, there is your resistance on the 27th. There is your high of the day yesterday. Okay, it's really like 309.50. Okay. Now, also, which you don't see on my chart right now, but because I have pre-market data and post-market data off. But yesterday, after the close, the SPY sat at that 309.50, couldn't get through it. Today, pre-market, the SPY gets a 309.50, can't get through it, starts to pull in. So now I'm looking at this 309.50 here and I'm saying, man, it's a real nice area of resistance. I think the market's going to pull in from here. Why do I think the market's going to pull in from here? Because this reminds me a hell of a lot like 2008. Okay, a hell of a lot like 2008. These moves are insane. Okay, this was panic selling to the downside. This was panic buying to the upside. During environments like this, these moves always overshoot. That's what volatility is. Okay, in 2008, you had some of your biggest percentage gains in stock market history during the bear market crash of 2008, 2009. So you would think, how does that make any sense? Why are the biggest days in history? Why did they occur during one of the worst crashes in history? Because of volatility. Okay, because things get oversold, then they get overbought, then they sell off again. After we had nearly a 1,300 point increase in the Dow yesterday, the single greatest increase in market in Dow Jones history, I'm saying to myself, if we can't get back through this 309.50 area, we are going to fade yesterday's move. Okay, you do not just go from the sell-off that we had the end of January to just all of a sudden the market does this and we're right back to normal. That's not how markets move. So I'm looking at this action. I'm looking at the last 2 weeks of trading, and I'm saying this reminds me so much of 2008 that this huge move is going to get faded. I think we have to get back down and test this 285 low. I think we need to get down here, retest that area, see if it holds before we eventually continue higher. That's what I think this market needs to see. All right. So that's why coming into the day today, I'm like, this looks just like 2008. I'm going to fade this yesterday's move, and we're going to look for a pullback back down into the low 300s. Right out of the gate, we pull back in hard off the SPY, and it doesn't look like much, but this is a big pullback in the SPY. Okay, you're talking about the SPY went from 309.50 down to 306.50. It's a 3-point move in the SPY, which on any other normal market environment is a big move in the SPY. For the SPY to move 3 points in less than 10 minutes is normal. In a normal market environment, that's a huge move. Now, in this market environment, it doesn't sound like much, but that's a big move lower. So on this first bounce back, we had VWAP right here. On that first bounce back right there, that rejection at VWAP, I got long the TVIX. Take you guys to my trade announcements on the day. Sorry, the font is so small. Here you guys can see at 9:44 a.m., I'm long the TVIX at $100.72. Stop loss of the SPY gets back through 309. So we get back above VWAP here, I'll exit that position. And right away, we just sell. Right away, this SPY just sells off all the way down to 305. And I take some profit off the table at 103.58. So right away, $3 a share profit on the TVIX on 25% of my position. I took some off right there. Then I'm sitting in the trade. I'm very comfortable. I'm thinking, this is great. We're going to get a move down towards 304, and then maybe finally a move down towards this 300, 299, 300. So that was my first target. This was going to be my second target. Okay. And my last final target would have been down here. And that's the game plan that I had coming into the day. And it was working perfectly coming right out of the gate. And then bang, 10 a.m. surprise. The Fed was not scheduled to make a rate decision today. They have a meeting scheduled a couple weeks from now in March where they're supposed to make a decision on if they're cutting rates. Everyone expected the Fed to cut rates, just not today. Just not today. There was a 100% baked in chance of a rate cut in March. It was just going to be, is it 25 basis points? Is it 50 basis points? That was the only question mark. The Fed to come out and do a surprise rate cut today immediately shot the market higher. And I didn't know what was going on I just saw the market do this. I didn't know if it was coronavirus related. I didn't know what was going on. I just exited my position immediately at $99. Okay, at $99 right here, you can see I sold that TVIX at $99. Now that ruined my entire trade. Okay, ruined my entire trade, and now I'm pissed off because I had such a beautiful trade working, and the Fed really kind of screwed me on that. But there's nothing I can do about that. There's no way anyone could have predicted the Fed was going to come out with a surprise 50-point basis cut at 10 a.m. this morning. There's no way you can plan for it. People have asked me, Mike, how could I have anything I could have done to know this was going to happen? Absolutely not. It's just part of the risk of the markets. The Fed came out with a surprise announcement. This was not planned, not scheduled, not expected. And the market immediately jumped 14 points. We went from 305 to, 9 points. Went from 305 to 314, okay, in a matter of minutes. 305 to 314. All right. And I lost money on the trade. Screwed me up for the whole rest of the day. But here's the serious problem I have with this Fed cut. Okay. So that was my trade, right? I made a couple other trades today, MITO. I went after TVIX again late in the day, and it just kind of chopped around. As you can see, the markets were really just chopping around at the end of the day. And I thought we were going to get another like sell-off. Like right here in the markets, I thought we were going to get another sell-off, like going into the close, and we just kind of bounced around a little bit. So I'm going to take you guys to the TVIX at the end of the day. You see how the TVIX just like bounced around. So I didn't really get any of the action that I was looking for. I took a small loss on that TVIX position, but the big one where the damage was done was earlier in the morning. You can see here, the TVIX was looking beautiful, higher highs, we were rocking, and boom. I was like, oh my goodness. And then you can see what the TVIX ended up doing. So I was really, really frustrated that they came out with this surprise 50-point basis cut, because you can see what the TVIX did today. Even with the 50-point basis cut, the TVIX came back. The market sold off. Okay, this is a Band-Aid, this 50-point basis cut. The issue that I have with this 50-point basis cut is, you're using some pretty valuable ammunition, and you're starting to run out of ammunition, which is rate cuts. The federal funds right now is between 1 and 1.25. That is low. You don't have much room before you go to zero. Okay, so if the economy really does start to slow significantly, we don't have as much ammunition. The Fed doesn't have as much ammunition as if rates were, let's say, 2% or 2.5%. They don't have as much room. I believe in 2008 they were like at 3.25 when the crash started happening and they started playing catch up to cut rates. Now, what I think the Fed is doing is trying to get ahead of it and cut rates now. In 2008, one of the big mistakes that the Fed did in 2008 was a huge mistake. They were too slow in cutting interest rates. Now, when you cut interest rates, it takes time. It takes maybe 8 or 9 months before that starts to trickle. Like, it takes time for monetary policy to start, the effects of monetary policy. It takes time for that to start to be seen in the markets and in the economy. So in 2008, they basically waited until there was a crisis, then they cut rates. It's too late. So if they cut rates faster and sooner, it could have eased the blow and the damage done during 2008. Okay. So what I think the Fed is doing now is saying, we could have a real issue on our hands here. Let's do as much as we can, as soon as we can, to get ahead of it. Now, I respect that. That makes sense. I understand why you want to do that. If that's the case, cut rates in your March meeting. You are scheduled to cut rates. You have a meeting scheduled in the month of March. Cut rates then. You do not come out with an emergency 50-point basis cut. That's what this is, an emergency cut. The last time the Fed did an emergency cut was in 2008, when literally the world was ending. The entire financial system was about to go under. Banks were going under. Insurance companies were going under. Unemployment was skyrocketing. The economy was completely falling apart. That is not now. The economy is very strong. No companies are going out of business. Could the economy slow from the coronavirus? Sure. Is it dire straight emergency? No. And that scared the hell out of people today. It's not about they cut 50 points. People expected them to cut 50 points. People expected 25 points. Some expected 50. It's the manner in which they did it that I have the issue with. Because you can't the Fed pulled an oxymoron today. They come out and say, emergency 50 basis point cut, and the very next sentence, but the fundamental underlyings of the U.S. economy remain strong. What? That doesn't make sense. It's like jumbo shrimp. Doesn't make sense. You can't in one breath say, we got to cut rates right now. We can't even wait 2 weeks for our scheduled meeting and cut rates when we are scheduled to give our rate decision. That's what that meeting is for. That meeting is to say, we are cutting rates or we're not cutting rates. And if we do cut rates, this is how much we're cutting. That is the whole point of that meeting. Why they couldn't wait until that meeting to make the announcement, I don't know. That is what scared people today. Because the last time they did an emergency cut was in 2008 when it was a true emergency. So to do the emergency cut today caught a lot of people off guard and makes people start to wonder, well, hold on a second. Is the economic impact from the coronavirus going to be a lot worse than we thought? Is that why they just came out with this emergency cut? The Fed, in efforts to stop panic, created more. Now, if there is anyone, this is my opinion, if there's anyone watching this video right now that is a astute economist that I will humbly say knows a hell of a lot more than I do about how the Fed and the interest rates and what you think that they're doing. If you think the Fed made the right move today, comment below, let me know why. If you think the Fed made the wrong move today, comment below, let me know why. I think they made the wrong move. Not just in cutting by 50 basis points. It's like, fine, we can argue about should they have cut, should they have not cut, should they have cut 25 instead of 50? That we can argue about all day long. It's the manner in which they did the surprise cut, which obviously pissed me off because it ruined my trade this morning, which I think would have been a home run trade. I think that would have been a home run trade. I was long the TVIX at $100 and change. I think TVIX would have went to 120. It would have been a monster trade. And I'm pissed off about that because it screwed my trade up and I ended up losing money. And not only it was worse than just screwing up my trade, I lost money, which really, really pisses me off. Okay. So, but aside from that, I just think it was the wrong move. I think, my McAfee protection's expired. I just think that, they could have waited to make the announcement during the Fed meeting, and it would not have scared people because it just would have been expected. I just don't understand why they had to do the surprise cut. And that's just what I've been trying to wrap my head around, and I just disagree. I just don't agree with it. I just don't agree with it. All right? So comment below, guys. Let me know what you think. But guys, love this volatility. Okay, love it. It's not going anywhere soon. I expect volatility like this for the coming weeks, and I will be ready to be trading like crazy. And I'm going to be pushing and trying to make the most out of this volatility. But if you do not like this volatility, size down, control your risk through position size. This is not the market environment where you can control your risk through your stop loss, because the moves are so much bigger. Your stop losses are going to be further away from your entry price because the stock is just moving so much. This is not an environment where you control your risk through stop loss. This is an environment where you control your risk through position size. So be smart, understand the volatility that's going on right now, adjust your position size accordingly so that you can participate in the action. This is not a market for the faint of heart. This is not a market for those with weak stomachs. And to try to offset that, reduce your size. All right. I'll see you guys in chat tomorrow, and we'll see what craziness we can deal with tomorrow and how big of a move we get in the next days. All right. Take care, guys. I'll see you in chat.